In today's video, we are going to discuss about two beaten down stocks who are market leaders and who are available at very good discount, and we will also discuss their next immediate support. So let's start. So our first company is Relaxo, and I'm sure you all must be aware in what business Relaxo is in. So Relaxo is in the footwear business. It is the largest footwear manufacturing company in India. You can see that, which deals in non-leather products, that is rubber, EVA, slippers, canvas shoes, sport shoes, sandals, school shoes, and other types of footwear. And it deals basically in the value segment. So it caters to the value segment customers which are price sensitive. So that's the market it is particularly focused on. And it has very good renowned brands under its portfolio. First one obviously is Relaxo, then we have Spark, Flight, and Bahamas. And this company sells its product through the retail outlet as well, plus through the e-commerce mode as well, and it also exports its products. So here we can see that it is the leader in the sector, which is the leather and leather product sector. Basically, we can call it the footwear sector. So you will see that it is number one in terms of market capitalization, and currently it is 35% down from its 52-week high. So it's available at very good discount. So the main reason why this stock is available at such a great discount is because recently from last quarters, the result has not been up to the mark. And you will see that the OPM, which is nothing but the operating profit margin of the company, is going down. So earlier it was 22, and then it has been going down 13, 16, and you will see it further falling down to 13 and 9 level, which is the main cause of the reduction in the profit and the reduction in the share price. But these are all temporary problems, and it's not even this industry. All the industries right now are going through this rough phase where their operating margin is getting hit. Why? Because of inflation, because of high material or input cost. Their expenses are increasing at a much faster rate than their sales, which is ultimately impacting their profit margin. But is this a situation that is happening only now? The answer is no. This inflation situation has happened previously a lot of times, but for few quarters there will be a difference, or there will be a dip in the OPM, but company or the market leaders will eventually recover from this situation and will regain their OPM per percentage. So this is a temporary problem, because of which you are getting a very good company at a very good discounted rate. And this, as per my view, is the right time to invest in this company, because then once they grow, once this temporary problem is gone, then this share will definitely not be available at the same price, because then the profit margin will again coming back to the same levels, profit will start increasing, and since the profit will increase, the share price will also start increasing. One thing I wanted to tell about Relaxo is that during this high cost scenario, they are not passing the overall increase in the cost to the customer. They are only passing a fraction of the cost, which means that the prices of the product is not going up at the same rate that the other market players may have to increase. So this is one thing that the company is doing in order to gain more market share and curb the competition, which is mostly in the unorganized sector. So in this footwear industry, still more than 50% of the sales comes through the unorganized sector. So still there is a lot of ground for this company to cover, and gradually the unorganized sector will shrink and more market share will come to the market leaders. Let's look at the chart and let's see what will be the next support for this company. So we are now at the chart of Relaxo. So you can see the Relaxo is currently trading at 887. So earlier it was taking support at 950, and after that there was an upside, and for some time the stock was taking support at around 1000 rupees, you'll see. But now after the result, the market has broken all the previous supports. So 1000 plus 950, all these supports are broken now. So for the next support, let's see what is the next support which is available. So for Relaxo, the next important or major support is at this level, which is around 820. So you will see that around this it has taken support previously 2 times. So this is its next strong support, and it's very close to that. So let's see if it reaches to that level or not. But right now also the stock is available at very good discount. Company is fundamentally very strong. You can definitely look into it. If you think that this industry is going to grow, if you think that the company is fundamentally strong, you can take your own decision, do your own research, and accordingly invest if you like. So our second share is Astral, and I'm right now on the website of Astral Pipes. So here you will see the products, the type of products that Astral is working into. So it's mainly plumbing related items that they work into. It's mostly related to PVC pipes and all. So here you can see these are their products, and this company is number one in this sector. Now let's look at the group companies. So positive point for this company is that it is also acquiring other companies like adhesive companies. So you will see the group companies: Astral Adhesives, Bond IT, US, UK. Astral Bathware is also getting into the bathware segment and also in the paint segment, which is a good thing for the company because it will increase their revenue, it will help them grow and become more big. So here you'll see that in the plastic product industry, it is the leader. It's on the top in terms of market capitalization, and currently it is available at a discount of 29.18. Around 30% discount is currently available, and you'll see the market cap. So market capitalization wise, it is around 37,000 crores. Now this company has also been going through the same problem of increase in expenses and reduction in the OPM margins, operating margins, and you will see that the earlier company was doing around 18, 23, 20, 18 was constant, then 15 and 14. So there is a dip in the OPM, and that's why you see a decline in the share price. And now we are at the P&L of the company, and here you'll see the details from starting March 2011, and you'll see that the OPM was around 14, 15, then it went down to 12, then again 14, 15, then 17, 20, 17, and again it is dipping to 15. So what it shows is that it's not a new problem. It has been there, and the company has survived it. Company is around 16-year-old in the market, and it has gone through various phases. It has seen different recession period as well, the bear market as well, and it has been able to survive and do very well during that period as well. Now if you look at the return profile, you'll see that the sales growth has been very good, and the profit growth has also been very consistent, 29, 20, and in last 3 years 35. And if you'll see the CAGR return, you will see that the CAGR has also been massive. Last 10 years CAGR were at 46%, and this is after the share price available at a 30% discount. So at a normal or a peak, when it was at its peak, it must have been around 50% CAGR, which is massive, which means that the 1 lakh that you invested 10 years ago would have become 50 lakh after 10 years. And 5-year CAGR and 3-year CAGRs are also in 30s range, which is again very good. Last 1 year you'll see in minus, because obviously we have seen the problem with the OPM and the profit margins, but again it is a temporary situation, which is a very good thing for us as an investor, because that is the only time when you will get these market leaders at a discounted price. If this temporary problem will not be there, then you will not get these share at this much discount. These will always be available at their top or maximum 5 to 10% discount. That's it, here and there on the short term period. But this is, I believe, is a golden opportunity. You can definitely look into this company, study it, look at its result, listen to the management interviews, commentaries, and see if you are convinced that this is a sector which is going to grow as India grows and become a developed country. Do you think this industry will be required? Then definitely you can take a call on this share. Now let's look at the chart for this share and what are the immediate supports. Now we are at the chart of Astral, and you will see that it is down from its top. So it's around 30% discount that is currently available. The next immediate support, if you look at, is around this level where it took the previous support as well. So 18,000 is its immediate support. Sorry, 1800 is the immediate support, and after that you will get support at every 100 rupees. So next support is at 17, and the next will be at around 1600. So these are the immediate supports available, but as I said, company is already available at a massive 30% discount, which is not less. It's a very good discount if you want to start and if you like the company. And if because of market condition it gets available at 1800 or 17, 16, then those level will also be very good levels to enter into this stock. So that's it in this video. We'll meet again in the next video with some more information. Thank you.